GBPUSD here with you, professional trader at Star Prosper. Today's market open, I want to go over a potential trade opportunity on the pound dollar. It's a possible bat pattern setting up for us if we continue to get another bullish move on the pound, that is. So let's pull that up on the charts to find our potential entry stops and targets. To recap some of the trade positions that I'm currently involved with inside our private client group, which I'll get to in a moment, before we draw up the analysis on the bat pattern opportunity on the pound dollar. Appreciate your time and don't take that for granted. And as always, grateful for the opportunity every week to share with you what I have. Let's go to the charts right now, because we're talking about the bat pattern. So here's another one that I entered today. And this came down and hit targets as I was doing the video for you. And the same thing applies. Okay, so I was talking about double targets in the video. As we come down and we hit target 1 at the 382, this is the exact same pattern that we just covered. All right, so if I take this, if I clean this up and draw it in so it's easier to see, we came down, let's just get rid of that so we can all follow along. Again, this is pound yen on a 1 hour time frame. Okay, we just came down and knocked out target 1 here. So again, it's the exact same thing. We have an impulse leg all the way towards the downside, swing high to swing low. So where do we come up into? Fibonacci retracement, swing high to swing low. Okay, we come up into a 50%. So here we go, swing low to swing high, right there. And then another Fibonacci from this low to this high. Swing low to swing high, right there. We come down into a 50% as well. So we have 50 and 50. That was 2 criteria. Number 3, we need a CD completion from the full leg of the move, okay, all the way up into an 886. We have a CD move right there, up into the 886. And as we hit, as price action hits that 886, that completes our bat pattern right there on the pound yen 1 hour time frame. So there it is. So it's easy to see. Now, oops, just jumped around there. Now, where was target 1? 382. So let's grab another Fibonacci retracement from this low to this high. So swing low all the way up into swing high right there. Now, 382 was our target 1. Now, as price action came all the way down into the 382, as you just see, it just drops straight through it. These are good trades, right? Pain-free trades. When it comes up into your sell zone and completely falls off cliff right there. Our stop was above our X point looking left. So as we come down and we hit the 382, we clock in about 55 pips or so on this trade. We take off half of the contract. So take off half of the position. We roll stops to break even. And now we're looking for follow-on targets down at the 618. So we're in a risk-free trade now with target 2. So we just be patient here. That's all you need to do from here. Price action is either going to do one or two things. It's either going to come down a little bit further and hit your target 2, or we completely reverse from here, get stopped out for break even, right? Either way, we took some pips off the table, put some more money onto the account, and we continue to show up every single day and trade the plan. Remember, it's continuing to trade the plan. And this is what I do every Monday morning, every London market open with the private client group. And one of the important reasons behind doing this is proof of concept is key. I truly believe that if you were showing others how to pull pips consistently, then that's exactly what you do. So we trade live every London market open, and I show you everything that I'm involved with. So we've got the euro dollar here, and then Aussie dollar and Kiwi dollar. That's it. So guys, this is a bat pattern opportunity that I got involved with on the euro dollar 4-hour time frame. This is also the same pattern that we'll be going over on the pound dollar in just a moment. So we've got our entries here, stops above our X point looking left, but as we came down and hit target 1 here at the 382, we get to roll those stops, as you can already see I've done here, to break even, because we trade 2 contracts, so double position. So we took off half of our initial contract at the 382, we roll stops to break even, and then we look for follow-on targets down at the 618 here, okay? Jumping over to the Aussie dollar here. Now, this was a trend continuation trade. Actually, I'll just show you what happened here. So we had a swing low to swing high, and then we had a pullback, then we had a new structure high. So immediately I'm looking for long opportunities, okay? So we had that pullback back down into our structure looking left, okay, right there. So as you can see, green arrow, this is exactly where I bought the market. Our target got hit, but our second target right up here at the 127 did not get hit. So as we come up and we hit target 1, again, we take off half of the contract, we roll stops to break even. So roll stops from 113, which is below our previous low. Took off half after hitting our first target, roll stops to break even like this, and look for the follow-on target at the 127. However, price action decided to come all the way back down, hitting our entry right here, and we got knocked out for our break even there. And then over on the Kiwi dollar, we still have another chance. So exact same trade setup here. We have a break of structure looking left. We come back down. We retest this structure level. We buy it up. 2 contracts. So initial target was up at the highs here. Okay. Initial targets was a retest of the highs. We take off half of that contract. We roll stops to break even. And as you can see, we're looking for a follow-on target right here at the 127 Fibonacci extension, right? So that was another good trade there, looking at about 55 pips on this trade. Let's go over to the pound dollar. Now this is on the daily time frame. It gives you plenty of time to watch this trade play out. Well, this is a potential trade. So let's identify a potential 200 to 300 pip move. Just a side note here, these don't work every time. There's winners and losers in trading. So think of it in terms as a business, income versus expenses, right? So what am I talking about? Bat pattern opportunity. Excuse me. So we have identified initial move up all the way down. So this right here from swing high to swing low, this will be our impulse leg. Okay. First thing that I want to identify when we do ratio trading, which is pattern trading, is we want a Fibonacci retracement from our swing high all the way down to swing low here. Okay. So the first thing that we want to identify is where has price action pulled back up into. Now this is advanced pattern formation. So it requires 3 things that we're looking for. The first criteria is a retracement back up into a 50% from our impulse leg, right? Swing high to swing low, we pull back into a 50% Fibonacci retracement. That gives us criteria 1. And then what we're looking for is another Fibonacci retracement to be hit, right? But this time we take it from swing low to swing high. Okay, we want to measure where price action has pulled back into here. So grab a Fibonacci retracement tool. We take it from swing low to swing high. We're looking for a minimum of a 382. We get another 50% hit right here. So we have a pullback all the way into, so here's our 382. We hit that. That's the minimum. And then we come all the way down to a 50%. So we got a 50 and a 50. Criteria 1 and 2. Now we're looking for number 3, right? So we need a CD completion from this move all the way up into an 886 Fibonacci retracement. So what we'll do is take another Fibonacci retracement, and then we'll go from swing high all the way down to swing low. So just the same way as we did the first Fibonacci retracement. And as you can see, we're sitting at the 786 right now. What we need out of price action is another bullish move towards the upside. If we can get another directional move up into the 886, this is where we are going to sell the market. Okay, so if we get another bullish move all the way up here, we're going to sell all the way down into double targets. This is criteria 3. We need a move all the way up into an 886. If we get that move up into the 886, that completes the bat pattern opportunity for us. This right here is a CD completion. So our entry is at the 886. If I just grab my dealer thingy here, actually, right there, and I drop it in, easy for us to see, and make it this so everyone can see. So we have our entry at the 886. Remember, our stop is going to be at the 113. So you want your stop to be above the X point looking left right there. You want your stop above structure. Okay. Entry, stop, and now we're looking for targets. Target is a Fibonacci retracement from our full leg of the move. So from swing low to swing high. Okay, that is where you draw the Fibonacci retracement. Swing low all the way up into swing high right there. We want to drag our target 1 down to the 382. Yes, that is where our target 1 is going to be. We copy this. Okay. So we copy that, and then we drag this one down to our 618. So target 1 is at the 382, and target 2 is at the 618. You have your entries, stops, and targets right there. If we get target 1 hit, you take off half of the contract, you roll stops to break even, and then you look for that follow-on target down at the 618 right there. And take a note of the risk to reward profile. We have over 1-to-1 risk to reward. And on target 2, we have over 2-to-1. When we look at these patterns, know that we're 60 to 70% accurate on these types of pattern formations historically. Now, that's what we expect to see. What that means is 30 to 40% of the time, so 3 to 4 out of every 10 trades is a loser. That's why it's imperative to always look at the risk to reward profile. Make sure that you're lining up, make sure that you are following your rules, and make sure that you are doing all the things that are necessary in order for you to be successful. And remember, with this kind of risk to reward, you only have to be half right. As you are learning, studying, trading, and becoming a profitable trader, I want to key you in on an important point, and that is simply, I talk a lot about ratios and trend continuation trading and structure trading and pattern formations that yield high probability areas, good risk to reward. So a nice risk to reward ratio. But none of this means anything if you don't follow your rules or follow your plan. You can have all the knowledge in the world and a lot of information, and you can really know what it is that you are supposed to be doing. But if you're not coming into the markets every single day and doing that, then you are in a heap of trouble. And that tends to be derived from one or two things: a lack of education and what you ought to be doing, and 2, from knowing what you have to do, but you're so emotionally out of control that you just can't follow your rules. Now, that lack of able to follow rules is typically derived from, I don't know that my system is profitable. I'm not sure I'm doing the right things. I'm trading with money that I shouldn't be trading. Now, that's extremely common. And I can't afford to lose this money. All these types of things will feed on your inability to follow your plan. So just a little pitch for you here about the private client group. And one of the reasons I started this was to help traders out with exactly that. Not only to provide the trading education and the live trade alerts, but also the rationale behind the trades, why I enter the trades, why I move my targets when I do, why I have my stops where they are, why we choose double targets. So when I show everything to you, you not only see the trades, the patterns, but also an understanding, the rationale behind why we are doing what we are doing. That is really the key difference that we do versus the other stuff that's out there. Our goal is for you to become consistently profitable. I don't measure the success of how many people stay with me inside the members area. I measure it on how many people finally get it and do it. Do the steps and go out there on their own and do it for themselves. Those emails I really like getting. So if you've been looking for something and looking for a place where you can begin an earnest study of the markets and have support in there, and training and education, the trade reviews and an alert service that actually explains why we are doing what we are doing, then you ought to check out the Star Trader 2.0. And you can do so with the link below. And I know that you'll absolutely love it, what's in there. Yeah. I trust this lesson was valuable for you, the psychology of patterns, and showing you a couple of good trades that we are in. Until next time, be safe, enjoy life. I appreciate you, and live well. You deserve that.